Ladies and gentlemen, I greet you all. It's that time of the show where we do, you see, the forex trading strategy. This strategy, I did not go deeper into it because it's mainly for those who are beginning to trade, because I want to ensure that they are also given an opportunity to understand the markets in their accordance. You're going to see that most of the strategies that are going to be put, they are a bit advanced, but also this is a strategy that I use today, each and every day. I don't like complicating things. For most of you who know that have been into my sessions as well as in Java Wednesdays, they know that I do not like to complicate things. So I don't want us to even waste time. Let's start looking into the strategy. Basically, the strategy is emanated from the higher highs and the higher lows. So this is the first thing that you should put at the back of your head in order for you to understand and master the strategy. So you must understand that we have two trends. We have a downtrend and an uptrend. So looking at the downtrend and an uptrend. So let's start by looking at an uptrend. An uptrend is made of the series of higher highs and the higher lows. As you can see, as you are moving up, you are looking at the series of the higher highs and the higher lows. Just make sure you put this into consideration and you put this at the back of your head since I'm explaining it, because it's going to play a very important role when we are moving forward. So we have a series of the higher highs and the higher lows. Notice that the moment we change a trend into a downtrend, we're now having a series of the what? We have the higher high at the top. It's mainly two higher highs that are almost equivalent and equal to each other. I'm going to explain a lot about this. But now we then change. You see that we no longer have a higher high that is equals to the higher high at the top. However, instead of a higher high, we now have a lower high. And that lower high is almost equivalent to the previous higher low. So that lower high is almost equivalent to the previous what? To the previous higher low. And it's not even equal. It's not equal to what? To the higher high. If we continued to push above the current existing higher high, that's where we're going to be having what? A higher low. But we failed to push above the existing higher low. That's the reason now why we now have a lower low and a lower high. Now we've changed from having a series of higher highs and higher lows into us having the higher high and the lower low and the lower high. Notice that very thoroughly because it's going to play an important role into the strategy that we are going to be doing. Moving right along, as you can see that I'm still showing you the very same thing. In an uptrend, you have a series of highs and lows. In a downtrend, we have a series of highs and lows, but now they are no longer the same as the previous one. So in the uptrend, we have a series of higher highs and higher lows. In the downtrend, we have a series of lower highs and lower lows. Take into consideration this. It's not the same. Take into consideration and know about it. Moving right along to another example. Here they say the lower lows shows that the bears are in control as they continuously push the price down the previous swing and move the market into the fresh low. And then the lower highs, they drop in the bearish trading market as the weakness in the market is unable to close the price above the previous swing. So those are examples I had to put into you guys. Now, I don't like always dwelling that much into examples and so forth. I love just moving straight forward to the presentation as a whole. So as you can see, we have the higher highs and the higher lows. We have what? We have the the lower highs and the lower lows. And now we are going to practical examples. So with practical examples, I'm going to show you exactly what we saw on our previous slide. So showing you exactly what we saw on our previous slide will help us understand the market much more better, in a much more better way. So higher highs and higher lows. So I want us to change from the candles to the line graph. The strategy applies much more effectively when you're looking into the line graph. So I want us to all name this together. The HH is there at the top and the HL, the higher and the higher lows. This is what makes the whole trend to be as what it is right here, as you can see. So this continues as it is until there at the top, when we're having the very same series of higher highs and higher lows. And this is just the naming of it. I want you guys to notice we have the higher lows, still the same thing. Even here I can clone and put it there. I can clone and put it down there, and I can clone, put it here, can clone, put it up there, I can clone, put it here. So this is the situation we are currently having. But now you can tell now that after some time there was this dark sheep of the family that was introduced here. There was this that was introduced here. A person then asked themselves, Java, but I saw in the examples that you had previously, you're saying you're using this thing. So it's important for you to start by naming. The first thing that you must do, you must name, you must understand which trend are you in. Are you in an uptrend? Are you in an uptrend, or you're in a downtrend, or you are in a consolidating trend? So those are the three things that you must always know. A consolidating will always be a range. It's always going to be a ranging market. So as from this, we understand that we are in an uptrend. In an uptrend, we are looking for higher highs and higher lows. But my strategy is mainly gonna be helping you guys understand. The moment you have not broken the higher low, you are still looking for buying opportunities. That's the first skill that I'm giving you guys. The moment you haven't broken the higher low, you are still looking for buying opportunities. Take that note down. The moment you haven't broken the higher lows, you are still looking for what? For buying opportunities. Every time when you are trading using the strategy, the moment you haven't broken the higher lows, you're still looking for buying opportunities. You will always going to be having a person who always says this. I've had students, I've been teaching for the longest time. You always have a student who will say, okay, fine, we always buy when you hear, we always buy when you hear. But now here, guys, it's already exhausted here, it's gonna sell now. How can it sell when it haven't came back to retest, or when it haven't impulsively broken the structure that was currently there and came to retest the structure a little bit, or the previous lower high? It haven't done that. How do you say now we're looking for sells at that time and moment? And I want you guys to now look back to what I was teaching in the slides that I gave you. I said to you guys, the moment we have a higher low that is now broken, the support of the higher low is now broken. That's the only time we are going to be looking for a different direction. And the support of a higher low is broken and is retested. The very same support of a higher low has turned now into a resistance. The support is turned into a resistance. That resistance is no longer a higher high. That resistance is now a lower high. We have a higher high at the top, now a lower low and a lower high. So we have a, now I want you guys to take note of this. I want you guys to take note of this. I want you guys to take note of this. So here we are. We're going back to our charts. This is NAS 100, NAS 100. And then now, let me remove this. I want you guys to pay attention to this lower high. So, I mean the higher low. So, on the higher low, I'm drawing a support because it was acting as a support structure. I'm drawing a resistance on the higher high. I'm drawing a resistance there. I'm drawing a support there. I'm drawing a resistance there at the higher high. I can still, this one is still a higher high. But now we're supposed to have a lower high here. Here we're supposed to have what we call a lower high here. We're supposed to have a lower high. In the process of us having a lower high, what happened was different. In the process of us having a lower high, what happened was different. We broke that lower high. We broke that lower high. So it's important for us to have a line now. When we've broken the lower high, you can never say it's still a lower high here. It's now what? A lower low. So I'm going to introduce now a new person, a lower low. So now, the moment now you are having a new person that is called a lower low, you're no longer going to call that guy a what? A higher high. That guy is now a lower high. That guy is now called a lower high. That guy is now called a lower high. So the moment you're now experiencing a market that now has lower highs and lower lows, you already now are anticipating for what? For selling opportunities. Because now that sharp retest that you would have anticipated from what we always are teaching you, that you must break and expect a retest on the structure and a sell, is not there. However, we broke and retested on the previous high. On the previous high. That's what's important. When we broke the lower low, I mean the higher low, we already are expecting to have what? A lower low. And the retest of the lower low is no longer a higher high, but it's a lower high, and it always going to retest where? It's always going to retest on the previous higher high. In that case, you can literally sell that particular thing or instrument that you are trading at that time and moment with lot size even 100, because you are 100% sure this is a forex trading strategy that helps you guys to identify certain opportunities in the market. These are the opportunities that are prevailing to you guys. So now, instead of now having the series of what? Of higher highs and higher lows, you're now going to be continuing moving down with the series of what? Of lower lows and lower highs. The very same thing applies to you when you are what? When you are selling. The strategy, as I have explained to you right now, when you are buying, it 100% works the same when you are also doing what? When you are also selling. It's the same thing, the same methodology when you are only having the series of the lower highs and the lower lows. When we change direction, that's where you're gonna see the series of lower highs and higher highs. That's the same thing. This is literally the easy strategy that I always use, and I've made quite a lot of back from using the very same strategy that I'm teaching you guys right now. So never always, because I always hear people saying it must retest back to the structure. If it went down impulsively, it must come back impulsively. That's not always the case. It must retest the previous higher high. The moment if you were able to spot the higher highs and the higher lows, that's the only point that you must always look. When it didn't test the structure, just always ensure that you check. Even if it tests back the structure, it probably is testing the previous higher high. It is probably testing the previous higher high. It's a nice breakout strategy that you guys must know and understand each and every time. So this is the strategy that I use, and in most of the times I've been 100%, like not 100%, 90% of the times I've been highly profitable. What's important about the strategy, you must be able to name your higher highs and your higher lows, and be able to go spot the change of direction. The change of direction happens when you break the higher low. The moment you break the higher low, always make sure that you start looking for opportunities. Look for what? Don't sell. Don't sell yet. The moment you break the higher low, don't sell late. Don't sell yet. However, do what? Always wait for the retest, and that retest is gonna be a lower high, and it's gonna be retesting when on the previous higher high that had taken place. That line that you draw every time, because your zones play a majority role on these things. Your zones play a majority role on these things. Yes. That was the end of the strategy. This strategy, guys, however, can be incorporated together with the Fibonacci retracements to make it to be a little bit more advanced. You're going to see we have Tapelo who's teaching about Fibonacci retracements. Let me just set an example how you guys get to see that. If you always start from the position, the draw your resistance and your support, and then from there, from your resistance up to your support, or from your support up to your resistance, make sure you cover them nicely there. And then, as you can tell, the Fibonacci retracements do not tell the direction. However, they help you to know where are you playing, or where are you going to highly likely to retrace. As you can see here, after we broke the higher low, our lower low is on the previous is on the fib exactly, and even here we are on the previous fib exactly. Then we dropped down just like that. So it's very much highly important for you to also understand the fibs very nicely and name them nicely. This was just for demonstration purposes, not that I'm applying them effectively as they should be applied, but this was just for demonstration that the very same strategy can be put together with the Fibonacci retracements for a better understanding. Thank you.